The appraisal is one of the biggest hurdles to overcome in the home buying process. So in this video, I'm going to talk about what the appraisal is and also what to do if your home appraises or does not appraise. I'm a licensed real estate agent in New York City and New Jersey, and I help people like yourself buy and sell homes here. First, let's start with what the appraisal is. An appraisal is when the bank that you're using to get your mortgage sends a licensed appraiser to the home to take a look and determine what their opinion of value is. The bank then uses this opinion of value to determine how much they'll lend you for the home. Keep in mind that this is one person's opinion. You can send multiple appraisers to the same property and get back varying results. When it comes to your loan, the bank will always lend the lesser of the purchase price or the appraised value. Let me illustrate what this looks like in a few scenarios. In the first scenario, I'll talk about a home that overappraises. In the second scenario, I'll talk about a home that appraises right at the purchase price. And in the third scenario, I'll talk about a home that underappraises. For these scenarios, let's say that you're purchasing a home for $1 million and you're using a conventional loan, putting down 20% and getting financing for the other 80%. For scenario one, let's say that this home that you're purchasing for $1 million appraises at $1.1 million, so $100,000 over the purchase price. This means that your home overappraised. And this is a good thing because that means that your bank will lend you based on that $1 million purchase price. So if you're putting down 20% or $200,000, your bank will lend you the remaining 80% or $800,000 to make up the full $1 million. Remember, your bank will lend you the lesser of the purchase price or the appraised value. So just because your home overappraises, so in this scenario, it overappraised by $100,000, that doesn't mean that the bank is going to give you a bigger loan than what you actually need to buy the home. For scenario two, let's say that this $1 million home that you're buying appraises right at that $1 million number. That means that your home appraised right at the purchase price and the bank will lend you the amount of money that you need to buy the home. So this is another favorable situation. Now let's say that this home that you agreed to purchase for $1 million appraises at $975,000, so $25,000 less than what you agreed to purchase it at. This means that the home underappraised. This can create an issue, but you'll have a few options to overcome that. The first option is that the seller can agree to sell the home at the lower appraised value. So in this scenario, the seller would agree to sell the home for $975,000 to you instead of the $1 million. The second option is that you can agree to pay the difference. So in this scenario, instead of the bank lending you $800,000 or 80% of the $1 million purchase price, the bank will lend you 80% of the $975,000 appraised value, which is $780,000. So you would have to come up with the $20,000 difference between those two numbers. The third option is to negotiate something in the middle between you and the seller. So the seller would come down a little bit on price and you would add a little bit more money for your down payment in order to make the deal work for both of you. In this scenario, if the seller lowered their price to $990,000, then you'd be looking for the bank to lend you $792,000 because that's 80% of the new $990,000 purchase price. However, the bank is still willing to lend you 80% of the same $975,000 appraised value, which is $780,000. So now you'd have to come up with the difference between the $792,000 that you hoped the bank would lend you and the $780,000 that the bank actually is lending you, which is $12,000. That's better than you having to put down $20,000 had the seller not reduced their price by $10,000. So this could be a win-win situation for both of you. The fourth option, which is the worst case scenario, is to cancel the deal. If neither party can come to an agreement to make the deal work, then you'll have to cancel the deal and keep searching for a new home, and the seller will have to find a new buyer. For scenarios like this, you'll want to make sure you have an appraisal clause in the purchase agreement so that you can cancel the contract if the home doesn't appraise for at least the contract price. I know that sometimes having this clause in a purchase agreement isn't possible, especially on a home that has a lot of interest on it, because you probably waived the appraisal contingency in order to win it. But on a home that doesn't have a lot of interest, you should definitely have the appraisal contingency. If you have any questions about this, or if you're looking for a real estate agent to help you buy or sell a home, please reach out to me. All my contact information is below. If you found this information in the video helpful, please hit that like button and subscribe to my channel for more videos, and I'll see you in the next one.